How to invest in stocks. He bought a stock for $90, it dropped to $30. He held it. 2 years later, it hit $1,200. No, he wasn't a genius. He just understood how to invest. The fear they don't talk about. When we hear the word stock market, we imagine two things. 1. Riches beyond imagination. 2. Or losses that empty entire savings. But nobody talks about the middle. That confusing, lonely space where you're trying to invest, but have no idea where to start. Should you listen to YouTube gurus? Should you invest in that one trending stock everyone's talking about? Or should you just avoid it all because it feels like gambling? The truth? Investing is a skill. And you're about to learn it, for real. The first mistake most beginners make. Let me tell you about Shreya, a 23-year-old, first salary, super excited. Her friend told her to buy a stock he heard about on Reddit. She put $50 in. It jumped 10%, then crashed 60%. But because she was buying hope, not businesses. Most beginners invest in stocks the same way they pick lottery numbers. Emotionally, not logically. That's mistake number 1. Investing isn't a feeling. It's a framework. Let's build that framework together. The actual step-by-step. Step 1. Open your gateway. You need a demat and trading account. Think of this as your digital locker and door to the stock market. Apps like Zerodha, Upstocks, Grow, and ICICI Direct make this easy. Just PAN, Aadhaar, and a bank account, and you're in. But don't invest yet. Step 2. Know what you're buying. A stock is not a number. It's a piece of a business. When you buy HDFC, you're not buying a stock. You're buying a slice of a bank. So before you buy, what does the company do? Is it profitable? Is it growing year after year? If you wouldn't buy the full company, why buy even 1% of it? Step 3. Don't try to time the market. Everyone wants to buy low, sell high. But guess what? Even the smartest investors get it wrong, constantly. Instead, start something called SIP, Systematic Investment Plan, in mutual funds or index funds. Buy a little every month, no matter the price. It's not timing the market. It's time in the market that builds wealth. Step 4. Start with index funds. Confused by which stock to pick? Don't pick any. In India, for instance, start with Nifty 50 or Sensex index funds. They automatically track India's top companies. You get exposure, low risk, and no need to become a finance expert. The emotional side no one prepares you for. The market will test you. There will be days when you lose money, when your screen shows red, when your heart tells you to sell. But hear this. The best investors are not the ones who predict the market. They're the ones who stay when everyone else runs. Because wealth isn't made during the highs. It's made during the lows by those who don't panic. And you will panic. You will doubt yourself. But if you stay the course, you will thank yourself 5 years from now. You don't need to pick the perfect stock. You don't need to be a finance expert. You just need to start, small, consistent, and educated. But more importantly, because the real secret to investing is this. It's not about getting rich quick. It's about never being poor again. Like this video, share it with one friend who's afraid to start. And subscribe. Because here, we don't hype stocks. We build investors.